Good morning, guys. Mike Pattern Traders, March 30th. It's the end of the month. I don't think a new move or a new trend will take place until after the quarterly open, which is quarterly VWAP. More likely than not, it's probably going to be a deviation to the top side into a micro downtrend. I do not think that the main dump is here yet, the one that John is talking about. I wouldn't advise anyone to be in that market. That's probably going to be a buying opportunity for all of us, where we're going to be able to load up on some breakout retest alts, which I think, personally speaking, if you can't make money on these altcoins right now going up, you're gonna have a hard time making money in the market all in all. So there's traders that play trends very well, and then there's traders that play ranges very well. But I think the most lucrative the most lucrative model in trading is to be able to play the altcoin rips. I've gone from being a scalper to being a swing trader to being just strictly just an investor the past couple of maybe year and a half. So I've been changing around my methods, and I think that the most profit I've ever made was when I caught altcoin bottoms. When BTC bottoms out, or when BTC has a high time frame pivot, you kind of migrate away from BTC. You open up your BTC loan, you let it rest, don't touch it, but you start focusing on altcoins, because the altcoins are going to make you that 50 to 100% rip. So back in March, I think we were somewhere over here when we did that dump down. I posted in Discord that as long as this 37K level holds, which it did, target is going to be the yellow box. And the reason why I was able to identify that was because of the liquidity. Here, I'll show you. Where is this thing? So when you come down here and you take out the $32,000 trap, which was basically the deviation of the original low in the summertime, chances are you don't really want to come down here and revisit it if you're going to attempt a bearish retest or a lower high. I'm not telling that this is bullish, but I got a DM. How did I identify this? When you make your first low and then you get your first high time frame pivot, I don't have the indicators over here, but when you get the first high time frame pivot, you have to take into consideration that low, which is over here, is going to be low number one. In this case, though, I know this is going to sound weird, but in this case, our main low was here, man. This was the main low. This right here should have never happened in a normal bullish market. So if you look at the oscillators, this was the pivot. And then everything under here was coming from a really high time frame, which was going back to the two week. So the way we've been playing the whole uptrend from, I think it was the Elon range, from down here, because that's when I really got into the oscillators. When you have high time frame pivots, no matter what happens, we've been breaking out, right? We had it here, and we had it here, and we had it here. The only problem is when we got it here in this range, instead of us going up, we died. You know why? Because the monthly here was bullish. The monthly here was bullish, and the monthly here was going for that div, right? So it's going for its final top. But the monthly over here was bearish. So as the monthly is going down on the oscillators, and then you get your daily, 2-day pivot over here, it's not going to do much. You know why? Because the monthly still wants down, and the monthly has precedence, unfortunately. So I'll make a separate video when everything is said and done. But for the most part, that's the only reason I was able to depict that we need to go to the top side. Once you create a low, then you create your main price action low, chances are you don't revisit it until you go back up to that area of that oscillator. And that oscillator level was between $42,000 and 46. So now we've attempted this so many times already. I'm like, all right, the third time we go up, the fourth time we go up, it's probably going to be a break. And it did, it broke it. So those who are talking about or asking me in DMs about this chart right here, that's the only reason why I was able to pick and identify that level. Okay, let's go back. Let's talk about some BTC action right now. We're officially back into the old range. Well, not really the old range, but the main range after the low that was put into the summertime. Remember, if you extend these lines, right? If you extend these lines, and you push them all the way out, we consolidated here for quite some time, right? We did a little bit over here, we did a little bit over here, we did a little bit over here, and now we're probably going to sit here and chop around in here. Now, the best thing for us as traders is for us to stay in that range. And the reason why we want to stay in this range is because we want altcoins to run. I can't see us getting above $49,500 off the first attempt. This yellow box over here is probably going to be a little bit of a hard attempt to break above, unfortunately for us. But either way, we're stuck at the mid, which is the 47.8. I do think that whatever dump we get is going to be a buying opportunity. We are not supposed to be losing 42 to say $39,000 on a weekly basis to continue the bullish uptrend. Now, if we happen to, on a daily basis, get back into the old range, as long as we don't close a weekly under it, I think that we will be okay. More often than not, when BTC deviates the old range, right? This is your top. This is your top. If you deviate the old range and you come back in, you die. You go back down, right? More often than not. But in this case, given we do have some high time frame pivots in play right now, we probably will see a decent buying opportunity for a leg up after we get a dump. Again, everything is invalidated if we lose $39,000 or $40,000. And you should start worrying if we lose that 44K range, right? So you got two levels to worry about, 44, and then if you lose 40,000 around there. But the most alarming thing is if you get a weekly close, not even a weekly, to be honest with you. If you get a weekly under 44, but if you get a daily under 39, there's a freaking problem there, right? So take that into consideration when you're playing the higher time frame, so you could actually swing some altcoins. Now, regarding structure itself, let's tear all this shit off. I don't even know why I was looking at that. What a BTC 4 hour. All right, so we got above the yearly open, which is beautiful right now. You do not want to deviate it and come back down. Let me delete everything. Actually, I need the yearly open. All right. Hold on, guys. I got to paint this real quick because I need the yearly open on. It's important. Yearly open. All right, so you need the yearly open on. As long as you stay above the yearly open on a weekly basis, more likely than not, whatever dump we get down is going to be a deviation to the downside, right? Something along the lines of if we do happen to get it like this and then continue to the top side. Now, I don't think that we're going to get above this fair value gap over here at $49,000. And the reason why, I got another DM asking me, actually, I had a few messages asking me, how do I identify which fair value gap to use? I know Rev asked me that in the chat as well, but the truth is that you don't really know. You could identify a million gaps in the chart because obviously the chart has a million gaps, right? Every time frame has a gap, but you need to identify the levels, the ranges, the areas of interest that led to an impulse move. So out of this whole box over here, right, the only gap that matters is the gap that trapped people, right? This was your trap. This was basically the trap that trapped all the fucking long breakout motherfuckers that were longing this thing over here, right? You long this, oh yeah, I'm gonna long and I'm gonna freaking go up, or we're gonna go to $60,000. Boom, trap, and then you just collapse. So this right here is pivotal. This is why the fair value gap level here is important. A lot of people were shorting the gaps over here, we're shorting the gaps over here. Like, dude, just because there's a fucking gap there, it doesn't mean that it's going to dump, right? You have to learn how to identify why there's an important gap. You have to learn how to identify the importance of the gap. Why is there a gap there, right? Is it because an impulsive volume just came in? Or is it because a trap took place? Identifying the trap and the deviation is far more pivotal and important than identifying a gap. Just keep that in mind. Okay, so I can't see us getting above 49.5 with ease. Any move to the downside, I'm going to assume that we will hopefully not break under this. So I know this is a big range and whatnot. Oh, you're talking about $42,000 to $39,000. But again, this is a high time frame level. If you're playing the low time frame, if you're playing a 1 hour, you're not going to be looking at 44 or 42 or $40,000, right? You're going to be looking at a micro range, which I'll explain in a little bit. But if you zoom out a little bit, right, you have your daily order block here. I think it might be a 2-day too. Yeah, you have a 2-day order block here that's just sitting there waiting to get tapped, just waiting, right? This is your 2-day block. I'm going to name it 2-day. And more often than not, we have a shakeout before the real leg up, right? So I'm not telling that this isn't the leg up because this could potentially be all we're gonna get, right? But if there is any possible continuation to the top side, I think we're going to consolidate, shake everybody out, consolidate, shake everybody out, and do something like this, right? This is what I'm thinking is going to take place. And then from here, I doubt we're going to get above this block over here. I'll tell you that much. From here, once we take the liquidity and the fair value gap in here, I think it's going to be lights out. At that point, if we don't make a higher low, all in all, meaning a higher low, meaning a high, your low, and then if you don't make a higher low somewhere here, there's only 3 points, right? 1, 2, 1, 2, sorry, 4 points, 3, and that's 4. So if you don't make your higher low structure after you take your liquidity and your fair value gap at that 50s, then you fucked. So everything that's going on right now in this range right here, to me, is still just noise. We really haven't done anything. We broke out finally. Thank God we broke out. It's been how many months? 3 months. But until we get a proper dump after a higher low is in place, I'm not even like excited. I'm not doing anything. All I know is that I'm going to try to make as much money as I can off the altcoins on this leg up. Put a typical fib level from top to bottom so you guys can see what I'm talking about. I mean, there's a lot of people out there on crypto Twitter that are just throwing targets out there. Like, dude, don't fucking complicate it, man. You want to make money? Play whatever is in front of you. If things flip, like people are already thinking, oh yeah, I have a fucking wave that going from here to here to here to here to here. Dude, play the freaking level. We're here right now. Play this. Where's the next move from here? Why are you talking to me about up here? Who cares, right? Like, it's so sad that people are still doing this terrible behavior from like freaking years ago. So right now, currently, what I'm thinking is going to, I don't know, I'm not predicting, but what I'm thinking is going to happen is we're going to consolidate. We're going to scam wick to the top side, come back, come down, make a micro higher low. We're going to buy that. I'm personally going to buy that. It's not financial advice. I will buy that. And then we're going to target 50s. I don't think that the macro top or local top, if you want to call it, will be right here at 49. It might be a potential slap into a breakout retest, something like this, for example, or wherever this goes, 44, 42, 41, whatever it does. But I think the ultimate target is going to be the gap that we have up here. I'm going to give you a clean chart so you see what I'm talking about. Yeah, there we go. Here we go. The gap. See this gap over here? Right here, up here. So this is probably going to be the ultimate target because you have liquidity resting over here, unfortunately, right? And you do have a FVG somewhere in this box. So there's a lot of shit that needs to get taken from the top side, especially because we spent 3 months consolidating at the bottom, right? So clean chart, please, sirs. Yes, clean chart. Remember I told you guys that we're squeezing and we're in the midst of a breakout. The first level of interest is 49.2 from the top side. What the fuck is this, bro? And the second level of interest to the downside, sorry, the first level to the downside is 29.7. So we broke out to the top side. Now, is this an actual breakout? Yeah, it is. To me, it is. It's a breakout. Unless we fucking fake out and come back down, I think this is a breakout. This is a real breakout. Everybody was saying something like, oh yeah, we're going to just go like this and then go down. Cool. All right, but we didn't. So now you have to kind of like change your perspective. I'm not saying, basically, don't be married to your bias. Whether you're wrong or right, reaction is key. It's not about projecting or forecasting. It's reaction. We broke out. React to it, dude. Make some money off it. So as long as we hold above these MAs right now, I know I'm not an MA trader. Unfortunately, it's not me. You should ask someone that is. But the way I see the high time frame, when you do happen to get a squeeze between these MAs and these MAs, as long as we hold above the first MAs, these are going to start slowly trickling up. These two down here, slowly coming up. That's going to create support when we do happen to tap them after the breakout. So I think we look pretty. We do have a pretty decent dump coming up in April. John already confirmed it with me. He told me to be careful. But if you go, I want to go to a clean chart. So I want to show you guys something. Hold on. I don't know what this is, but let me see what we have here. Oh, wow, yeah, we see it. We did breakout. All right. So I'm going to delete everything because we don't need it. And let's put on. There we go. Okay. So when you see price action that just keeps making these sliding, no liquidity taken type of patterns, and then all of a sudden you see a sideways accumulation or distribution, you don't really break down after. You could definitely break down, but you don't really break down without going to take more liquidity to the top side. So I'm not telling you that we're bullish. I'm not telling you that we're going to go to all-time highs. All I'm saying is that it's time to go fuck some bears. That's all I'm trying to tell you. And then again, rinse and repeat. Screw the bulls again, right? So I don't think that we're in the position to be calling bull markets yet. I do think that we have a pretty serious and nasty dump to the downside. But you have to take in consideration too, the VWAPs. Quarterly sitting at 55.9 right now. And then you have a monthly sitting over here at 49.2. I still think that it will get tapped. You also have an FVG, like I discussed, an important one, a very important one, sitting at that 49.3 level. So you have the gap plus the view up there at 49.3. And then after that, the next one is at the quarterly level. So chances are, the way I see it is, keeping it very simple, just playing the VWAPs, which we have some interesting new toys coming out for you guys soon, hopefully, if this works. You get above the 49K with maybe like a 2-day or a daily close. Chances are you're going to go straight for that 55, 56K range. You have a weekly over here, but I don't think it's going to be a lot of a resistance. It might just knock you down a bit for retest and then go to the top side. And then the ultimate target should be that 55, 56K range. At that point, I personally think I'm going to liquidate my whole portfolio, hedge, or just get out of the market and see what happens after. I'm not in the mood to actually sit and be a hero. That's how I'm playing this. Trend bars. I got another DM asking me how I was so confident to buy spot when I bought spot. Well, guys, this indicator was one of the first indicators that we've ever introduced, or John introduced. And it's the only indicator that we have other than the MSTX that can pretty much time a bottom. If you see multiple white candles on candle closes on 2-day and then go to the 3-day and it turns white after you had a multiple 2-day closes, you know you're bullish. Same thing with when it comes to the black. So the best spot buying indicator that I currently use right now and I've been using is the trend bars. When you see black, go to white. You know what? I'll make it easier for you. Let's make it freaking green or red so you guys can see. Let's make this red. Let's make this green. Look how simple this is. When you see red, you tell yourself it's going to be a buying opportunity soon. You wait. And then once the 3-day, I have alerts, but once the 3-day turns green, after you had multiple 2-day green candles, you know that you're buying spot. So you can front run all this because the 2-day stays green for a while. So you could sit there and accumulate while the 2-day is green. And then once your 3-day turns green, you hit it hard. You punt that shit hard, right? So that's how I've been playing my spot buys. I think it's a beautiful opportunity to be able to see visually what kind of trend we have. You're not going to always catch the bottom with this, but it helps determine where the bottom is, especially if you know how to use the oscillators. And the number one thing I told everybody when I was making the videos, once the 3-day crosses, I mean, dude, at that point, you know, like you need to be, if you're still looking for shorts at that point, then you need to literally reevaluate your whole perspective of oscillators. Once your 3-day signal crosses with the trend, more likely than not, you're at the point where you're going to start making moves to the top side. Regardless if it's small, big, fake, or whatnot, you're going to get your relief. You're going to get your pump. Doesn't matter if it's 5% or 20%. It's going to happen, right? And we did it again over here. I posted about this probably like 15 times, guys. I told you guys, put an alert for the signal crossing the trend. And I hope people listened. A higher time frame perspective, weekly, I got to put on the low band so I can show you guys what it looks like overall. The weekly still looks okay. I'm not really too worried about the weekly. We got a cross. This isn't really significant for me. You know why it's not significant for me? Because the signal line still has a flat line. If the signal line flatlines, then with the cross, then I'll start being happy. You know, until I see the signal line flatlining, I'm not too excited. The weekly is also at the midpoint. It could easily reject and go down. Still not excited about that, unfortunately. You know, like you need to get above the mid. When the weekly gets above the mid, you're definitely going to the pink up here. This little pink line over here. The weekly is giving you your second algo fire on the histo. Beautiful. It's exactly what you want to see. No bottoms are formed without histos that are activated on the weekly. So that's great. It means the next dump that happens has a good potential to be a higher low, not a lower low, right? So again, I'm not telling you that this is the bottom. All I'm saying is I'm finally seeing stuff that when we do happen to get the dump, it's going to make me a lot more comfortable to go bigger. That's all I'm saying, because this is what you want to see. These are the stuff you want to identify, right? This is strictly oscillator perspective, right? I'm not talking about price action. So 5-day looks beautiful. We already discussed this. Bullish as fuck. No doubt about it. 3-day bullish as fuck. No doubt about it. The algo fired on the trend again. great. We have the algo firing on the histo, amazing. The RSX is a little high for my liking, but it's okay. Until this thing turns red, I think we're okay. I think the 2-day turned red. Did it turn red? That'll be a little bit of a problem. Yeah, you see the 2-day is red over here. That's not ideal. You have to start being careful, especially because the trend line is at the bottom half. So usually what you want to see, if this is red, if the algo fires on the RSX and the trend line is up here, it's not bad. You're going to get a higher low, right? You're going to get a micro dump into, not a regular mid-time frame dump into another poker top set. But when you start seeing shit like this, where this is red and this is at the bottom of the pit, it gets a little scary because this still has to come all the way down here. If this was to the top side, it'll be able to act as support versus crossing all the way down back to the downside. You never want to be at the bottom half of the fucking pit. You never want to be under this 50% mark. I'm going to make this black so you guys can see it. I've indicated this a million times for everybody, right? You remember this. You never want to be under this black line. As long as you stay above this, as long as the trend line stays above this too, it's basically bullish trend. You see how we're sub 50 here? See how we went above 50 here, right? You always want the trend line to be above the 50. So chances are, more likely than not, if we cannot get above this, it's going to come right back down. And when the trend line does this, this is going to be probably like at least a 30 to 40% dump. I'm not even exaggerating. It's pretty serious, right? So be careful. Be careful in that aspect. Otherwise, everything still looks good on my end. Let's talk about the micros real quick. Let's turn this shit off. Let's put on high-low. There's a new high-low level indicator coming out just because I need something for, you don't have to use it. You can still use this one, but I need something cleaner. Something that I'll be able to use because I'm coming up with a strategy for scalps. Monday low got taken, right? Weekly open got tapped. So to me, this is distribution. We finally hit a level of importance. So this is going to distribute here on the micros, and then any poke up to me is going to be liquidity grab to come back down. And that's going to be pretty much the start to a micro downtrend. And I do think that we're going to end up coming all the way down here. You know, well, this is air. This is all air. So once we get that fake deviation to the top side above Monday high, be careful, guys. If we break back into Monday high, I'm telling you right now, exit some loans, man. It's going to be scary. It's not financial advice, but that's exactly what I'm going to be doing. So until we lose weekly open right now, we're fine. Weekly open is important. Open up your view-ups as well. Make sure you have the daily view-up on. It's important just so you guys can see where the daily holds us. As you can tell right now, we're suppressed under the daily view-up, the previous video, so there's a problem there. Don't forget the quarterly VWAP is going to open very soon. I don't know, 2 days. Keep that in mind. Where's the quarterly VWAP? Let me close this nonsense over here. We're at roughly about $40,000. That's crazy. That's not good. That means that the floor is at 40 for the quarter. So chances are, it's a good probability we are going to revisit 40. So be careful, guys. All right, cheers. If anyone has any questions, feel free to DM me. Some good stuff are in the works in the background, guys. Just be patient. Cheers.